Hello everyone. Today I want to share with you my thoughts on the recent earnings release from ADP and what I feel is in store for the stock going forward. So I will discuss the company profile of ADP for those who are not very familiar with this name, summary of their recent earnings release, the market reaction following the earnings release, and then I'll provide my thoughts about whether the stock is a buy at the current levels and also discuss some alternatives using put options. Let's begin. Automatic Data Processing, or ADP, is a company based out of the United States, well known for their products and solutions related to payroll processing, tax and benefit administration, human capital management, to name a few. It is a 70-year-old organization and has been named in Fortune magazine's World's Most Admired Companies list for the last 14 consecutive years. It is also a great dividend stock with an amazing dividend growth rate and a 44-year dividend increase history. We will cover a bit more about their dividends in a later section, but for now let's first look at their recent earnings release. So ADP had their Q4 2020 earnings release on July 29th, and as you may have expected, their operations were also hit by the current global situation. They reported a slight revenue decline and a flat EPS growth. The overall global unemployment decline also impacted the business negatively, along with a significant decline in new business contracts. Looking at the numbers, compared to the same quarter last year, their revenue was down 3% at $3.38 billion. Adjusted earnings before interest and taxes was down 2%, but the EBIT margin was relatively flat, which is a positive since this might be a sign of customer loyalty and pricing power. The adjusted diluted EPS was flat at $1.14, which doesn't look so bad when compared to how the overall economy got hit by the recent developments globally. In terms of the full 2020 fiscal year, they reported a 3% revenue growth, 6% EBIT growth, and a healthy 9% growth in EPS, finishing the year with an EPS of $5.92. So that's the good news. Leaving this aside, the area of concern for ADP is in their fiscal 2021 outlook, which is the period July 2020 to June 2021, where they are forecasting a small decrease in revenue but a substantial decrease in EPS of 13 to 18%, which is massive and quite concerning. So once this earnings announcement was made, it was not surprising to see the market reacting negatively, and the stock was down 6% on July 29th and another 3% on July 30th. Overall, the stock dropped this week from around $147 to $133, and it is very close to its 200-day moving average of $128, where it might find some support in the short term. Now let's discuss if this means we could buy the stock at the current levels, given that this is a blue chip dividend stock and it is quite reasonable to expect the company to thrive once the current economic situation eases. So in terms of their future prospects, as I mentioned earlier, this is a solid dividend play with 44 consecutive years of dividend growth. The current annual dividend is $3.64, which, as you can see here, has grown nicely from $1.36 in 2010 at a 10% average growth rate, which is amazing. Compared to their fiscal 2020 EPS of $5.92, their current dividend of $3.64 is well covered, and in spite of the EPS decline that is projected for fiscal 2021, it can be expected that the dividend growth streak will be kept up as there is sufficient earnings to cover for another 5 or even 10% dividend increase. So things look great from this end. But this doesn't mean it is an automatic buy at the current price of $133. Let's look at the PE history to see why this is the case. As you can see in this chart, this is a company that has demanded a premium valuation in recent years, where the PE has been as high as 34 in 2018. It has certainly dropped in the last couple of years, currently trading at a PE of 23, but with the earnings expected to go down significantly next year, the estimated forward PE is over 26, which is quite expensive if you are looking to buy the stock at this level. So I feel it is better to wait a bit for lower prices, as in the short term I do expect the stock to trend down to around $115 or $120, where it will look a lot more interesting. Now, instead of waiting for the stock to go down, if you have the capital to trade options, another alternative is to sell put options at around $100 or $110, which would give us some short-term profits while we wait for the stock to trend lower. But please keep in mind that option trading may involve much higher capital depending on your circumstances, as you need to commit to buy in multiples of 100 shares in case the stock goes lower than the put price before the expiry date of the option. Personally, I like this strategy more as it allows me to buy great companies at a price I am more comfortable buying them for the long term. So here are some trades I feel are worth considering, especially if you have some surplus cash to put to use, given that the bank savings interest rate are almost at 0% now in North America. As you can see, depending on what level you are comfortable to buy the stock if it crashes, we can pick and choose the put strike price. This can also be customized for the yield we want to collect. We could say sell the $115 put option expiring on November 20th this year and collect $410 for an annualized yield of 11.83%, or the 110 put option for an yield of 9.65%, and so on. Or choose an earlier expiry date of say September 18th and collect 7.06% for the $110 put. Another thing, if you noticed, is that the farther away you sell the put from the current stock price, it is a better deal as you are committing to buy at a much lower price in case the stock crashes before the expiry of the put option. Personally, for this stock, I would like to buy around 20% below the current price, so I will go with the $105 put option, which is highlighted in green, and would be happy to collect a 7.9% yield for this. Hope this gives you a good idea of the versatility of selling put options and motivates you to do your own research and find what suits you better in case you are interested in the stock. And as a friendly disclaimer, please note that I am not a licensed investment advisor and my videos are only meant to document my views on various investment related topics that I am interested in. So please consult with your own investment advisor before making any investment decisions. Hope you enjoyed this video, and I would really appreciate if you can please leave a like and comment below and subscribe to my channel. Have a great day, and I will see you in the next video.